Most e-commerce founders have no idea they're breaking the sales tax law right now. Are you one of them? Well, today's guest has a simple solution to help ensure compliance. Welcome to the Ecom Breakthrough Podcast. I'm your host, Josh Hadley. I scaled my own brand from 0 to 8 figures in sales, and now my mission is to take it to over 9 figures. On my journey to 9 figures, I bring you unfiltered conversations with the brightest minds in e-commerce. Past guests include Kevin King, Ezra Firestone, and Michael E. Gerber, author of The E-Myth. Today, I am thrilled to welcome Sam Ross, the co-founder and CEO of Numeral, a company revolutionizing how e-commerce and SaaS businesses handle U.S. sales tax and even international tax automation. Before launching Numeral, Sam built several e-commerce ventures that generated over $50 million in revenue, giving him firsthand experience with the challenges of scaling, managing cash flow, and preparing for an exit. With that introduction, welcome to the show, Sam.
Thanks for having me.
Sam, I know that people could not be more enthusiastic about talking about sales tax right now, but you are the man here. I actually heard you first on the Operators podcast, and I was like, this dude's smart, and I think a lot of people are actually sleeping on this whole sales tax thing. And I think the message needs to be heard from other people. So I am curious, like Sam, you've built $50 million, generating, or you've generated over $50 million in revenue on e-commerce, but now, and you still have an e-commerce brand, but now you're in the world of compliance. So tell me why you're in that world of compliance, and what do you see happening in the world of sales tax for e-commerce brands right now?
Yeah, so I ran e-commerce businesses for a number of years. And, the first business I had a jewelry brand where we were selling kind of, inexpensive jewelry I buy for 50 cents from China and sell it for $50. Using some SEO growth hacks, sell it for $50 on Shopify and Amazon. I got that to good scale, but there was just no retention. And so as soon as, we had Chinese sellers kind of undercutting us on Amazon and Facebook ad costs continue to climb, we had no retention. And so the business, effectively kind of went to zero. And we sold it and actually made some money, but it was, we could see the trajectory was not good there. And so I was like, okay, I want to do something with more retention. And we started a vitamin gummy brand we called Fling Wellness that I own. And does a little over $10 million a year in sales. And so that was much better. The average customer is buying something like 4 times from us. But at the same time, at the end of the year, 80+% of customers are gone, and you have to keep, it's still kind of a leaky bucket, and you have to keep acquiring customers each month. And so I was like, damn, I want something that's a little bit more durable that, will be around in 10 years. And I'm not so dependent on Facebook ads. And so I had previously worked in tech for, my last job before that, I had been at Airbnb as a product manager. And so I missed building software for a long time. And so I started looking around, what are the things that drive me the most nuts and what are the biggest headaches I have to deal with in e-commerce. And sales tax was this boring thing that I hated. And, I guess to give some context, when I first started my business, the jewelry business, I was based in California. This was 2017. I had to collect sales tax from my California customers. But if I shipped it to Dallas, Texas, I didn't have to, or Miami, Florida, wherever, I didn't have to worry about sales tax. I could ship it tax-free. And so it wasn't a big deal. My local accountant could kind of help me with it. But end of 2018, there was a big Supreme Court ruling called Wayfair for South Dakota. And after that, myself, along with, effectively all Shopify direct-to-consumer merchants, had to start worrying about collecting and remitting taxes and as big, if you get really big, up, kind of basically every U.S. state that deals with sales tax, just 47 of them. And so and so I was personally had to go and deal with, I had small companies, like very, very lean, three people, but I was all of a sudden each month having to deal with taxes in states like Pennsylvania, West Virginia, Hawaii, all these places that, like, why am I dealing with them? And, we had some software, there's kind of these incumbent softwares that exist, but they weren't designed for e-commerce merchants. They were really designed for these mid-market controllers at big companies or like tax managers. And I'm a founder. I don't want to think about sales tax. I just wanted to not deal with it. And I'm like on the getting letters in the mail, on the phone with an auditor in West Virginia arguing about something. I'm like, this is crazy. I want to spend my time, on product development, on planning, on growth, obviously, marketing. And so that was really the idea, was how do we build something that lets you get back to growing your business and not wasting time or having to think about sales tax.
Yeah, I love that. Well, we've definitely seen the sales tax, world change quite a bit over the last few years. And there's been good advancements. There's been not some great advancements. I think on the good side, right, if you're selling on a marketplace, Amazon's now forced to collect and remit sales tax for a lot of the states, right? Those are good things. Whereas before that was not the case.
Right.
But Sam, I'm curious to hear from your perspective, like, what are some of the biggest challenges you're hearing from e-commerce brand owners that are they compliant with US sales tax law? Are they not compliant? And where are the challenges arising from?
Yeah, there's a whole host of challenges. I think the first challenge is even understanding it enough to know what you need to do and where you need to be filing. So, we talk to folks all the time. They've quickly scaled their business. There wasn't they weren't thinking about Department of Revenue, Montana, Missouri, or somewhere like that. They don't even know they have to be dealing with sales tax. So the first thing we do for clients is we do what's called a free Nexus study. So they connect their Shopify data to us. If they have Amazon, connect Amazon, all their data sources, and we can understand where they need to be registered, right? So each state has their own set of laws. In Texas, if I sell $500,000 into the state over a 12-month period, I have to register. In some states, it's as little as 200 orders into that state. And so I think the first thing is just knowing where you need to be registered is challenging. And then on top of that, it's, actually once you figure out you have a liability, figuring out what you need to do from there to get compliant. There's a whole host of work that needs to happen. And then to be, making sure that you're staying compliant, you have to file on an ongoing basis. And also there's lots of other minutia that wraps around it that we take care of for customers. But I think, yes, the hardest part to start is just even knowing where.
Yeah. Well, and I think the challenge also comes into, like, just because you may have a site on Shopify, but if you're also generating sales on Amazon, you've probably easily crossed that threshold for most states already, just because of what's happening on Amazon. Is that true?
So, yes and no. So yes, it's true, but the way it works is each state has their own sets of rules. So somewhere like California, your Amazon sales count towards whether you have to register there. So the threshold in California, I believe, is I think like $500,000. But if you sold, $499,000 on Amazon and $3 on Shopify, you do have a liability. On that $3, you need to start collecting taxes. Whereas in some other states, they only look at your Shopify sales. So that's one of the things we do is we collate that data and we have a bunch of rules and we can understand that. But yes, and then there's all sorts of other minutia. Technically, for example, if you have inventory hosted in a state, that gives you what's called Nexus, and you need to register there. And of course, Amazon is storing your inventory in often in 30, 40 states. And so that will give you Nexus. At the same time, too, we've only seen a small handful of states actually ever look at your FBA inventory. And so often there can be a delta between sort of what's on the books and what's actually enforced. So we always encourage everyone to be fully compliant. But, a big part of what we do is also kind of show people like, here's what we see on the ground. And here's like sort of like what we see as like the kind of current enforcement regime.
Yeah. Well, I think the reason why I ask you those questions is because, I was one of the kind recipients of a California audit of sales tax back in 2018 before the whole Wayfair decision. And that was back when, like, on Amazon, you had to set up your own tax collection and remittance, right? That's before the marketplace facilitator tax laws came into place. And so California's like, hey, by the way, you've had inventory in our state because of Amazon FBA. So it's Nexus, and now we're going to audit you. So that was a fun experience. So I guess my question to you, Sam, is in my opinion, I think most e-commerce brands are sleeping on this, and they're just kind of like, oh, this isn't really a thing. But if you're starting to do some substantial things on Shopify, like this is something that like really compounds negatively against you
Yes.
if you just kind of like pull the blanket over your head and pretend as though like nothing's happening until one day you get those audit letters. So like,
Yeah.
do you see that happening? And like maybe like what are the states that are maybe more aggressive? And maybe let's talk about how we triage this for these brand owners listening.
Yeah. So that's definitely the risk, right? And so you can put it, there's a period, yeah, you might be able to put it off and hey, is the state, am I really going to be on the state's radar? But it does happen. So I actually talked to a merchant 3 days ago who, he wasn't filing in Texas, didn't really think about it. He got an audit letter, he had to go hand over his data, and he owed about $350,000 in back taxes, where he could have been, adding that to the purchase price and passing that cost on to the consumer, but instead he just wasn't charging it. And so now, I think the average Texas is pretty high tax rate. You know better than me, but I think it's somewhere like 8, 9, 10%. And so now on all those sales he has to basically take an 8, 9, 10% margin cut. On top of, I think there were some penalties and interest that were also assessed. And so, it's you might be able to get away with not collecting for a fairly long period. But if you haven't registered, the states can go back many years, and these things really they compound over, or they just grow over time. And so we definitely see it happening.
So
and then you asked me which states. Okay.
Yeah, what states
states
are coming after you, and how do they find your information? So I think it's kind of like both of those, right? Because people may just be thinking like, oh, I'm just online, nobody will ever find me. They don't
Yes.
even have an address on my website.
Yeah, good question. There's a couple ways states will find. So I think to start with, which states? There's a lot of states, and I think we put out some data around this. The ones that come to mind are California, Washington, Texas, New York. Those have been challenging. I think, I'm trying to think, and then some states too. It depends. Like some of them, the auditing is even more aggressive. I believe like states like Louisiana, they like hire third-party firms to do the audits who are just way more aggressive and like and like disrespectful. And so sometimes too, like maybe some they're less likely to audit you, but they're just like way more aggressive. But yeah, Illinois is one of the biggest ones as well, if I didn't mention that. So those are the ones that come to mind that I've just seen a lot. And then in terms of getting on the radar, there's a few ways. So one is often like Washington's known to they just send, I don't know how they find you, but they just send letters to almost all of our clients. Like they do these like surveys, and they're just trying to see if you're doing sales or have Nexus there. So they'll send you a big survey in the mail. Someone will get it. They don't really know what to do, and they'll just go fill it out and send it back. Like, yeah, I've been doing stuff there. And then all of a sudden they're like, oh, great, we're going to audit you now. So if you get a letter from Washington, make sure you talk to a consultant, a lawyer, someone before you go fill it out and hand over. Just hand over whatever to them. I think we had a client that was actually on Shark Tank, and so they got a lot of exposure. And then not long, like a month after that, they got an audit, I believe, in Arizona. And so I think even just like sometimes even just being in media appearances, the auditor might just say, hey, I'm going to go look this guy up in our database. It seems like they're pretty, because they're disclosing their sales on Shark Tank, and it was pretty large. And so they're like, that scale, it should definitely be registered here. And they weren't. And so they went and got audited. So it can be for media appearances. The other thing too is if you have employees in the state, as soon as you have an employee in a state, you need to register for sales tax, even if your sales are quite low. And so sometimes, whatever the Department of Labor, whoever's doing the payroll taxes, will share data with the sales tax department. And so they'll do a cross lookup and be like, hey, we see this business looks like an e-commerce business, and they have an employee here. How come they haven't been filing taxes here? Let's go audit them. And so that's another way. Occasionally this is not too common, but it has happened where a state will go to like a 3PL and try to get their list, make them hand over their list of customers to see if they have Nexus there, like especially like some of the bigger 3PLs, to try to get that data. I haven't seen that as much recently, but I've definitely it has happened.
So what does a e-commerce brand owner do, knowing that, like, especially when they're starting up, right? Because the cost of compliance can get overly expensive, right? You look at a lot of these, like there's a lot of these sales tax softwares out there,
Yeah.
but you're going to be paid for every single filing. And let's say you're like, I'm going to be super compliant. I'm going to sign up for compliance in every single state. And now I'm filing. Most of them are monthly, some quarterly, some annually, semi-annually, etc. But like sometimes that cost of compliance can be a few $1,000s a month just to remain compliant. And you're like, I'm not even spending, or I'm not even remitting a few $1,000s in sales tax. So what do you recommend like brand owners do where they're like, all right, I do want to be compliant because I don't want the $350,000 tax bill if I ever get audited, right?
Yeah.
Down the road. So what's the best approach that you recommend?